Hello, trading is closed on March the 18th, 2021. We do always start with our disclaimer, so let's do that. This is my predictions for, actually it's my trading plan for tomorrow, Friday, March the 19th, 2021. I can be completely wrong. Any trades you make should be at your own risk. Please follow the rules of my channel. Anyone wishing to contact me should be aware of my email address. Yesterday we looked for the pattern with the early low there. For the pattern with the early low today, there's the early low, and tomorrow's pattern has the early high. The time we made our prediction, we just hit a new all-time high in futures, or even higher than that. MEJT gave a target of 39.46.42. I said if we didn't gap up, that should print, and it did print. It isn't just a target, it also is a support resistance level. You can see support was really tested there twice, but finally it did break. Nothing obligates support to hold. Now, we do have a new target for tomorrow of 39.63.70, and unless we gap down smartly, that's my call. Be aware that when you're close to an all-time high like this, or the high of a leg, that's when targets fail. So we have less confidence in this than we normally would. So far, and I'm going to underline so far, this isn't unusual behavior after the FOMC announcement. The announcement was made at 39.4207. That's this green line. We went up 41 to 42 points. Usually the first move tells you what the next major move in the market is, so that is going to be higher. You then typically, not always, as I said yesterday, typically have a whipsaw leg where you go under this line by a greater amount than you went over it. You went about 41, 42 points higher. We only dropped about 32 points under it, so we should have 10 points to go. But these legs can be short, and if this is as positive as it seemed yesterday, and we don't get the whole 42-point drop, it doesn't mean anything. If we do start up, go over this line significantly, 39.4207, we should go higher, and I wouldn't begrudge the market those 10 points. If we do go down, there's no obligation to stop right there. The only thing which the rule says is that you would go over this line by a greater amount than you traveled under it. So all those things are positive so far. Here was the buy signal, the ultimate buy signal. We got enough to satisfy the ultimate, but not the standard buy signal. That gives us the target of 39.63.70. But remember, if we gap down smartly, the price remains on the table, but not the time. If we don't recover from this action today, that's pretty negative. I can't really count what's going on in this leg, but we're now close to that 38.98.81 price we mentioned a few days ago. If we undercut it and follow through, it completes a 2B top. It's a move higher over the old high, which then reverses under the actual trading range low of the bar which broke through. If that happens, this break is marked as a failed break, and it should be the end of the leg. It also isn't good that today's close was not only under the closes of all these highs, under some of the lows, but was also under the last high we hit before gapping up and hitting all those other highs. Now, if we recover from that promptly, it doesn't disturb me. But if we don't, it's a sign that this whole top was a false move and again should lead to a big leg down. Now, I don't know how to count this, but from this low, I think it's pretty clear we had a 5-wave up move. We then have a pretty clear 3-wave down move, although it doesn't have to be the end of this blue B. It's 3 waves down. After that, I can't really count with any degree of confidence. And the question is this an ending diagonal triangle? 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. If that's an ending diagonal triangle, you've got good fibs. And this could be the start of an impulse lower. And if it is the start of an impulse lower, we should get a wave C similar to this wave A, which, as you recall, is a pretty sizable drop. I mean, you're talking hundreds of points. This low is in the 3700s. From the middle 3900, that's a pretty big drop. So I don't know if that's the right interpretation or not. But if this is the end of B, and this is an impulse down, and this is an ending diagonal triangle, this is a long way down. So the bulls really have to recover from this, because undercutting all these highs and the lows, and this high is pretty negative. And when the other things we have with the Fed announcement and the new highs tend to be positive, and the MEJT price tends to be positive, and tomorrow's normal pattern is a positive day, if all those positive things fail, if they fail big. Tomorrow's pattern has the early high, we could gap down. Typically it's a rally day with a high in the final hour. Failure is a straight line drop. There's a higher target. Unless we gap down smartly, it should print. First move after the FOMC announcement usually, not always, usually telegraphs the next significant move in the market, and that move was up. Tends to be a 3-leg whipsaw first, each leg moving further away from the price at the time of the announcement. We came close to completing such a move for the second leg, and since the leg can be short, we're not precluded from starting to move higher immediately. As always, if we gap down smartly, it kills the prediction to print the target tomorrow, but not the prediction that it'll print. If the normally bullish pattern tomorrow fails, it should fail big, and I mean really big. It's possible to count the present leg up as complete. We may have started an impulse down. Bulls need the recovery tomorrow to invalidate this interpretation. I don't have enough yet to say whether it's going to recover or not. Usually it recovers, but usually and always aren't the same thing. And if it fails, we could be looking quite a bit lower before we're done. So we'll have to wait for the early trade tomorrow to see if we get our number or if the bears finally win one. And it's a pattern with the early high, and that's today's call.